Sales in the GTA just went up, not a little, 6.3% higher than last year. More homes sold in May than any May in recent memory. And yet prices are still falling. That is not supposed to make sense, at least not on the surface. But here's the part most people are completely missing. The GTA market is sending two signals at the same time, and most buyers and homeowners are only reading one of them. Today, we break down both, because understanding this moment could change what you decide to do next. Let me walk you through exactly what happened in May 2026 and what the numbers are actually telling us underneath. According to the latest TREB data released earlier this month, the GTA saw 6,583 home sales in May 2026. That is up 6.3% compared to May 2025. On a seasonally adjusted basis, sales were up 10% from April. That is a significant monthly jump. At the same time, new listings fell, down 18.9% year over year. Nearly 19% fewer new listings hitting the market. You would think that combination drives prices up immediately. Fewer homes available, more buyers competing, classic supply and demand, but the benchmark price still fell, down 6.7% year over year to $946,500. The average sold price dropped 4.6% year over year to just over $1,069,700. So what is going on? Here is what the numbers are actually telling us. The market is in a transition phase, not a recovery yet, a transition. Think of it this way. Imagine a large bathtub filled with water. You plug the drain and turn the tap back on. The water stops dropping immediately, but it takes time before it starts rising again. That is the GTA housing market right now. The drain has been partially plugged, fewer new listings, more sales, tightening supply, but there is still so much standing inventory sitting in that tub. Active listings in May reached 26,927 across the GTA. That is still a lot of homes sitting on the market. Even though it was down 13% from a year ago, it is still elevated compared to a healthy seller's market. Buyers have choice, and when buyers have choice, sellers have to compete. When sellers compete, prices stay under pressure. That is the dynamic we are still living in right now. But here is the interesting part. The sales to new listings ratio in May hit 37.2%, up from 34.8% in April, and way up from 28.6% in May 2025. That ratio matters more than almost any other number. It tells us the balance of power between buyers and sellers. Below 40% generally favors buyers. Above 60% generally favors sellers. Right now we are moving in the right direction for sellers, but we are not there yet. TREB President Daniel Steinfeld put it plainly. He said if conditions continue tightening, it could signal to buyers sitting on the sidelines. Translation: the window for today's pricing may not stay open forever. Hold that thought, because I want to come back to what this means for specific buyers. And before I continue, if you are finding this useful, hit subscribe so you never miss a GTA market update. Now back to what we were talking about. Let us talk about what is happening across different property types, because the story is not the same for every home. Detached homes across the GTA. Average price dropped 4.7% year over year to $1.36 million. That is a significant dollar amount off peak pricing. In markets like Pickering, Whitby, and Oshawa, detached homes are drawing more buyer attention right now. Why? Because the price gap between the GTA core and the eastern communities has widened. Buyers who got priced out 2 years ago are looking east again. Semi-detached homes held up relatively better, down only 2.8% year over year to about $1.07 million. That relative strength matters for buyers in markets like Scarborough and North York. Semis are being absorbed faster than detached in several eastern Toronto neighborhoods. Freehold townhouses took the hardest hit, down 8% year over year to around $916,000. We covered the townhouse market in a recent video, so we will not rehash that today, but that 8% drop is worth watching closely. And condos, down 6.4% year over year to $639,000 on average. The condo market remains the most oversupplied segment in the entire GTA. Active condo listings have been elevated since 2022, and absorption is slow. If you are a condo buyer, the data says you have options. If you are a condo investor, the data says be patient and do your research carefully. Every building and every neighborhood tells a different story. Now here is what gets interesting for buyers watching from the sidelines. The monthly numbers are actually showing signs of life. The average sold price rose 1.7% from April to May. The median price rose 3.4% month over month. Those gains happened alongside more sales, not fewer. That detail matters. When prices rise because fewer cheap homes sell, it is a statistical illusion. When prices rise alongside higher volume, something real is happening. We are starting to see that shift emerge. It is early, it is not confirmed, but it is there in the data. Tareb's own commentary says standing inventory is being absorbed. Competition between buyers has increased in some neighborhoods, and the expectation from analysts is that the price trend will flatten first, then move upward in the months ahead. That is not a guarantee. Markets can always surprise, but that is what the trajectory suggests based on current data. So what does this mean practically if you are a buyer in the GTA right now? First, you are buying in a market where prices are still below year-ago levels. That means relative to 2025 pricing, today offers more value in most categories. Second, inventory is falling fast. New listings are down nearly 19% year over year. That is a dramatic reduction in seller supply. As that supply continues to shrink, buyer options narrow. Third, mortgage rate conditions have improved compared to the peak. The Bank of Canada has been in an easing cycle. Lower rates expand what buyers can afford on a monthly basis. In markets like Oshawa, Ajax, and Whitby, detached homes under $900,000 are drawing renewed buyer interest. Those communities offer more space for the budget than anything inside Toronto's city limits. And commuter infrastructure has continued to improve in Durham region. In Scarborough and North York, semi-detached properties under $1.1 million are moving with multiple offer situations emerging in certain pockets. Not everywhere. But in the right streets, competition is returning. For first-time buyers specifically, this transition window matters. You are not buying at the absolute bottom. Nobody times the absolute bottom, but you are buying before the trajectory confirms an upswing. And historically in the GTA, buyers who entered during flat or early recovery periods have found the decision rewarding over time. Here is the uncomfortable truth hiding inside this week's data. The market looks confusing on purpose. Falling prices plus rising sales sends mixed signals, and mixed signals keep buyers paralyzed. But paralyzed buyers miss transitions. The data is showing us a market that is tightening from the inside out. Fewer sellers willing to list, more buyers willing to transact. Prices still softening, but monthly momentum shifting. That combination does not last forever in any real estate cycle. Eventually, one force wins, and right now, the tightening forces are building quietly. The people watching this market closely right now will be better positioned, regardless of whether they decide to buy today or in 6 months, because understanding the direction matters more than predicting the exact date prices turn. That is what the numbers are showing right now. What you do with that information is up to you. Chapters. 0 o'clock. Hook. Sales are up, but prices are still falling. 0:45. What the May 2026 Tareb data actually shows. 2 o'clock. Why sales rising does not mean prices rising. 4 o'clock. Which property types are holding and which are sliding. 6 o'clock. What this means for buyers across the GTA right now. 8 o'clock. Final thoughts.